So a very good day to you guys. A very good day to you guys. Today I would love to give an elaboration of this strategy that I took on volatility 75. Those who trade Deriv, this is a strategy that I feel people may need to understand. People may need to get the grasp of and to understand where exactly I came from, what I did, and how I got to where I am. I'm an ICT trader, but at times you just have to look at the market and see what the market is giving you rather than just because I've seen not all ICT concepts actually work when it comes to these when it comes to the synthetic market. So now let me go back to a clear chart. What you can note on this chart is the fact that the market has been making, at this point, we're on a sell-off. On this point, we were selling down to this point, and then from there, the market started to make, started to create an uptrend. So in understanding the uptrend, you can actually see that what I did notice was if I was to connect all these highs, then approximately I was going to get something that's close to touching this this new high that we made. So there was an approximate high that was going to be touched in terms of this point. But if you were to redraft it and then put it somewhere there, you would see that it is perfectly aligning, which means now I had one touch, and then I had a second touch, third touch, and then I had a fourth touch. So this is now indicating that although I usually put the lines for a trend line on the bottom when we are on an uptrend, but this one I put it on the top, trying to see which point the market is trying to reach at and where it would probably react to. Because when you're dealing with the market, you don't want to have a move that's going to take 2 days. That's going to take you just want a simple move that you can benefit from, and then you can go out of the market. So if we zoom in a little bit also, we can see that the market was also making these highs. It was also making these small highs. So I also went to these, and then I started to connect these highs, just plain old connection. So when I connected these highs, I understood that you can see at this point the market broke out of the trend. It broke out, and then once it broke out, what you have to understand about the breakout strategy is the market will always break out, and it will be looking to come in and test this trend line before it displaces upwards. As we can see at the moment, you see the market has touched this trend line and then it has displaced upwards. But this is not where I got the trade. At the moment, I just know that we're in an uptrend. But I'm trying to make profit of the small little movements that are along the way. And as a matter of fact, I before I forget, I have to indicate that I'm using the RSI as well for one or two particular reasons, and I am to explain these reasons in more detail. So I then jumped onto the 1 hour time frame. I was trying to determine where exactly we are going and the entire information. So as you can note, if you look at this point, right there, you can see that if I take this cross and put it right there, you see that this high corresponds with this high on the trend line. And then if I move on to the next part, you can see that there's a lower high that corresponds with this high, and then the next point, the market on the price action is actually making high highs and going up. But as you can see on the RSI, it's not making those high highs. So this is what we call divergence. Divergence is we use them for, at times we use them on the on between Nasdaq and US 500, where if one is diverging, it can showcase that the market is about to reverse, the market is about to change. So now I would also love to indicate, if I draw this line, you can see from this point to that point, and from this point on this chart on the RSI, you can see that there's a divergence. This is a highlighting indicator that, okay, we're about to reverse. Now, how did I see where exactly the market was going to reverse? So what I did is I came to the RSI, and then I said, okay, I'm going to draw a trend line on the RSI. So I came here, I connected these lows. When I saw that these lows are quite evidently equal from this low, it shows that they are quite equal, and market has been respecting all of these. Yes, it has a point where it was going below, but the market has been respecting all of these. And as you can see, we have a divergence, which means we are likely to change momentum. And then the next thing that I did was I also came inside this price action pattern. I saw that there was this point. If you come from this point where we were, this point where the consolidation started, up until this point, you see that there was a mini trend. So there is a trend inside another trend, inside another trend. So you just have to understand that the market always gives you the signs that can help you to successfully trade. So I'm just trying to adjust this so that it comes up and I can touch this point, so that I can show you where I entered, how I entered, and what was the result. So as you can see, the market came on the RSI. The market came, it showed change of momentum. It went below this trend line on the bottom there. And then if I take the cross again and look at where the market came and crossed this RSI, this point, you can see it aligns with the peak of our chart, of our price action. And as it went down, market came up and touched our trend line. Where did it touch our trend line? So it touched on the price action, and also it touched on the RSI. This now gave me a confirmation that, okay, the market is about to sell. But where am I selling to? That's why I was trying to connect this bottom trend line, so that I can know that the point where I'm coming from is, I'm coming from there, and then I'm just moving. I'm just having a sell. My sell region is just from there up until there. These 2 points is where I'm entering for a sell, and then I'm out of the market. So I would love to showcase to you what if I put on a sell order at this point with a stop loss just a little bit above, or just above, a stop loss of about, you can see it's about $123, and then I put a take profit. My take profit would be at a point that generates about 517 US dollars. So this is the trade that I did that got me 517 US dollars per single trade, and I opened about 5 lots on it. So I was trying to practice and see how this thing would pitch out on the market. And if I am to showcase to you how this trade transpired, you'd actually see that this trade is the one that was generating these monies, these 283 US dollars at 0.77. The eventual profit that I got from this trade was about 14,000, but it was on a demo though. And at times you have to start by understanding how to generate sniper entries before you can use it on real money. So you just have to understand where exactly you're going to enter, where exactly is going to be your exit, and make sure that your entry is a sniper entry, and then your exit is programmed in such a way that don't be greedy. I could have let it go down below this line, but I don't feel like it's going to close below this line. It's already showing signs that it doesn't want to close below this line. But if I am to also step down to a 1 minute time frame, you can see that yes, we had some closures, but we got no signs that this market is about to go down, as it hasn't closed. It didn't close below this low. So there might be a slight possibility that the market will be reversing to the upside, but unfortunately I was out of the trade, and I'll be out of the trade. This is volatility. It's very volatile, and you just have to grab the monies and go out of the market. So this is a strategy that just has to be considered. To all those people who would love to get more information on this, you can leave a message on the comments, and I'll do try to really give an explanation that is better than what I just did. You leave your questions and I'll be there to assist. Thank you so much.